Hello traders, and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking about real market structure versus structural points that should not be considered structure based on your market reading. And I do see that lots of traders have different perspectives on that idea, and I believe that is absolutely fine. I tell the same thing to those members that are in the mentorship, but what I'm going to be essentially doing today is walking you through my structure approach. And for that, we're going to be going through the simulator, right? I'm not going to be using TradingView, the backtesting mode over here. We're actually going to be jumping into a backtesting software, the one that I used and I've shared this one before in the past, and we're going to be going through some data, information, structure analysis, and I'm just going to be guiding you through my thought process, specifically talking about market structure. I'm not going to worry and go too in depth and anything else, but I'm more so going to be talking about market structure. But before we actually do that, I do want to share a little bit of what's happened today with EURUSD because I believe it is very, very interesting. I was able to share my analysis today with members in the community. So if I do go and show you guys this, you will see what I shared with everybody. There is a message over there which basically says that I'm looking here for a short, looking here for a long. Obviously, if you understand your daily cycle, then it will make perfect sense for you to expect what happened today. And obviously, if you pair that with the news that we had, you can see why we had the massive move that we've actually received today, which is quite awesome, right? So I did share with everybody that I was looking for those areas, and a little bit of my perspective and the CPI, always trying to give people in the community those reminders, which is important. And as you can see, we bought from here as expected, and we sold from this area almost to the tick in terms of the key level that I was looking at, which is discussed in the key levels guide on my channel. But once again, that's just a topic for a different day. Just wanted to share with you the beautiful daily cycle that we had today over here. Not only in EU, but GU and gold had beautiful cycles as well. It's worthwhile studying, so just wanted to recommend that to you guys. And now we're going to be getting into the backtesting software. We're going to be going back in time. We're going to be working through market structure. So once again, if you're confused with market structure, I believe, and I'm going to try my best to make sure that you understand how I view market structure, so that then you can make your own decisions when it comes to how you want to be approaching that idea. So with that being said, guys, if this sounds like something you want to learn today, make sure you stick to the entire video, and let's begin with today's lesson. Alright guys, so here we are on the backtesting software. As you can see, this is on a demo account. This is on MT4, which I don't really use nowadays. So that's why I use this MT4, because it's linked to my software to simulate markets, and when I'm trying to practice, this is what I would use. So this is where we're going to be working with. So I apologize if I'm not very good at managing MT4, but at this point I've gotten used to using MT5, so I'll just try my best to sort of go through that. Now we're gonna be doing a new simulation. So this is where we have some information in terms of the pair. So we're actually gonna go to GJ. Let's see over here. So we do have some information. We're gonna be going to 2020, February, Saturday, actually Monday. This is where we're going to start the simulation. It's going to end over there. Once again, I have no idea of what happened during this period. This is just a random date that I've chosen because this is where I have data provided by Duke as copy, right? So I'm not sure what I'm going to be presented with, But what we're going to be doing once again is going through my market structure approach and sort of explaining to you guys how I'm viewing the market structure, and what I would consider protected structure to be, the ranges, things of that nature, right? So I'm really not focusing this. I don't think we're going to be executing any trades. We may do, but I'm going to be focusing on providing you guys information on market structure, right? So let's start the simulation. Let's add some charts. And for this simulation, we're going to be using the weekly. We're going to be using the daily. We're going to be using a 4-hour frame, 1-hour frame, 30-minute frame, and 15-minute. We're not going to be going lower than that. And this is what we're going to be working with, right? So we do have now some charts to be working with, which is great. So now what I have to do is, as an example, we can use black on white as such. So this is going to be black on white. Just bear with me here for a second. Actually, I'm not sure if I should pause the recording and get all this done, because I do need to do some stuff before we get into the process of actually going through this. So let me see. Yes, I'm gonna be pausing the recording. I'm gonna get the charts ready, and then we're gonna be going through market structure. All right, guys. So I finished scale fixing all my charts, which allows me to move the charts as such, as you can see, which gives me more freedom. So let's start over here. So now by looking at the weekly, obviously we do not have much information on the left, so this is actually not going to be helping us in any way. Now on the daily we do have more information, right? So the very first thing that I see is this double top liquidity break in market structure. We have a great block over here that I would probably look for long. Once again, prices over here. I do see trendline liquidity, right? Basic retail patterns. You know there's going to be buy stops above this range, sell stops and stop losses below this area. So these are just basic ideas. What else do I see that's significant to the recent price action? Well, I see this. This tells me that we do have some sort of break on a lower time frame, which we're probably going to see as we zoom across the different time frames. And that's probably initiated somewhere over here. We've had that mitigation with this wick. So probably going short over here is a potential trade, right? Just based on very simplistic market structure concepts and candlestick understanding. So let's go to a 4-hour, and now we can have more information, right? So once again, let's do some structure analysis, right? So what I would say in this particular case probably is that, so we had this break, which set this new structural low in place. Then we pushed up right over here and we cleared this high, right? So this becomes invalid at this point, and I would be looking at this as a break right over here. This is an origin. You can see it has already been mitigated, and this would have been a potential area of interest to me, right? And you can see we're starting to move away, which is very good, right? So I would label this as such. I would say this is my break. I would fib the leg from top to bottom. I would look for discounted areas, which this one would have probably been one. I've seen that this is a last point of true mitigation based on the fact that this mitigated this previous area of orders, and I would have probably looked to go long over here and look to go long over here. This would have been probably my two areas. When you combine them with trend and liquidity, you can see that, right? And what I would want to do is probably take it to a supply zone up here, where I would probably look to go short, right? Or first getting to this wick would be a target, just because this is a very exaggerated wick. So you know you have a order block formed on a lower time frame over there. But I would mostly focus on the 1 hour if I'm going to be doing intraday trading, right? And the very same idea applies. You have the same break, the same origin that broke below the swing. So you have this area to potentially go long from, right? Trend and liquidity building, higher time frame structure to be targeting to potentially go short, right? So we're gonna be just replaying price, and I'm gonna be stopping it at key points, I guess, or at key areas that I believe are key. And we're just going to be doing that, right? So probably don't want to add a weekly, probably going to do next bar 1 hour. So this is where we're consolidating. So there's really not much to do. Now we're starting to move down, right? So this is very good. Now we're moving into a potential structure point right over here. Now you may be asking yourself, is this really a valid area to go long? And based on my market understanding and just based on this particular time frame, without, and please listen here carefully, without considering your daily cycle and timing, because this is not the real live environment, this is backtesting, so I don't have the luxury of that information. This would be an area where I would want to watch for potential longs, right? To possibly revisit this area and potentially, if my high time frame bias is bullish, to even clear this liquidity high over there, right? So that's an idea. So let's quickly go through the daily. And once again, if we go through the daily, this area actually is not the best, right? Because it's in the middle of this consolidation and could very well get taken out. I'd much rather go long over here or go short over here, right? So, but nonetheless, since we're doing a video over here, what we're actually going to be doing is saying that we want a long over here. Once again, based on my market structure rules, we do have a break on the left. We do have an impulse right over here. We do have this low clearing this set of liquidity, right? So liquidity criteria is fulfilled, but what I don't like is the fact that this comes from a mitigation of this particular POI that I'm not going to be discussing now, but essentially price is trapped within the two zones, right? So let's just wait for price to tap into the zone. Another potential area that you could be looking at, once again, we have this, you could be looking at this as well, right? So we have these two areas. So let's see what happens, right? Let's go next bar. This one gets taken out without any sort of probably movement in the opposite direction. So that's fine. So price might be seeking the origin block. But once again, based on the momentum that we're currently seeing to the downside, buying blindly over here would be considered risky. I would look for order flow shifts, right? I would want to see market structure once again tell me that we're going to be holding this area and that we're going to be moving up, right? But just for the sake of this video, we're going to be placing a pending order. Why not? Let's say, as an example, we want to do a 2-lot trade. We want to place a buy limit over here. Can I do this? So just a second, I'm trying to figure things out. Modify. Yes, now I can move this. So let's say we want to enter over here, whatever at market price, right? And obviously your stop loss would be below the swing low right over here, right? So this would be a potential trade idea. Once again, areas you may want to target could be areas of this sort, right over here, right over here. Sorry, to do this. Potentially, if you're going with the overall high time frame bias, you could target over there, okay? But there's no saying that this block is now gonna hold, right? Especially without a confirmation, which is what I would want to see, right? So let's say we take the buy, whatever, right? So let's play price out, and yeah, we're gonna be speeding this up. Probably a little, whoops, that's definitely too fast. So you can see we're getting some mitigation, right? Away from the block, which is great. And as you can see, Price is moving, that's 20 pips, right? So depending on how you want to do things, you can partial secure or just do nothing and let it play out, right? Whatever it is that you want to do. So yeah, price may tap deeper. Whoops, so let me do this. Price may want to tap deeper into potentially the wick where you would have a better risk to reward trade, right? And as you can see, we're rejecting that area for now, but there's no saying that this block is now going to hold and we're going to be moving up, because what you would truly want to see is a order flow shifting in that particular area right over there, right? So it's pretty straightforward. So let's say, as an example, you decided to instead wait for this area and you would want to go long over there, right? Okay, so we can't actually do that because we do have some open positions. So let me do this as an example. You could do that, right? But once again, as you can see, the block has been taken out. If we actually go through a lower time frame, I'm actually going to do that just to show you guys. We would want to see what has been the order flow as price has traded into this block. And that's why I always preach, you don't want to put your entire risk right over here without any sort of confirmation, right? Because order blocks on their own have a very low probability of holding, right? There's plenty of them everywhere. So if you try to buy and sell every single one you see, you are going to run and probably get into some big trouble. Right, so if we go through this and we do add some charts, let's add a 5-minute frame. So let's open this up. Let's add a 5-minute frame. Let's scale fix this. Right, scale fix, there we go. And as you can see, this is the order flow coming into your block. You don't see anything but bearish order flow holding across the block, right? So once again, unless you took a risk entry, there is no reason here for you to go long. And that's something that I want you to understand. Yes, you get some reactions, which depending on how you want to do things, you can manage, you can trail, you can move your stop, you can secure. It's completely up to you. It's not for me to determine. But you can see the order flow coming into the block. Bearish mitigation, moves lower. Bearish mitigation, moves lower. Bearish mitigation moves lower. Bearish mitigation moves lower. Bearish mitigation moves lower. And this is where we go. Right, so I'm just going to be going through one more example over here. So I hope that this provided you with a great example on why you want to look for confirmations at your areas, unless you have lots of confluence, with which once again you would want to go through your daily cycle and timing for that, which we don't have the luxury of doing over here. So you would want to try and put everything together if you're going to be trading and trying to actually take risk entries, right? So let's just continue watching price action, to be honest. So let's go to the hourly. Let's add some more information. You have a new break from this impulse starting over here, right over there. So that may be an interesting area, but once again, there's not a lot of higher time frame context to really gauge that information. And now we run up. So what happened over here? If we probably go through a higher time frame, you can see what happened, right? This block that I've mentioned before was the one that was responsible for the move up that we're seeing now. So once again, our structure idea on the higher time frame is in place and made perfect sense based on the trend and liquidity structural low that cleared the previous lows. This has been used as swing high liquidity, swing low to mitigate this previous area to drop further down, and it looks like we're now moving to the upside, right? So just some information to be aware of. Now we've broken above the structure point. We may be on our way to the wick. Who knows, right? So let's say as an example, we're looking at to go short. So let's do this. Price consolidating, this and that. I don't necessarily want to make this video too long, so we're just going to be waiting for one of the two edges. So let's say as an example, we want to go long over here, which I would probably say it's a good idea as long as you can confirm that, but I wouldn't necessarily want to do it blind. That's the message that I'm trying to get across. Even if you think that this is the structure point that's going to hold, you can do it blindly, but you want to then probably use splits your risk as price moves, right? You don't want to take your entire risk over here. Maybe you want to use half and you want to add the other half if and only if price confirms itself, right? So let's go through this. If you want to go long over here, I mean, you are already within the block. Would once again not advise to do it blindly, but this one is looking a little bit better just because the bearish momentum is not looking like this. It's more so looking step formation, right? So compression is happening. So let's say you want to go long over there for whatever reason that may be, right? So just to complete this video, as you can see, price moves up, right? Price moves up, moves down. Once again, you do get that reaction, 70 pips, just based on, once again, this origin block over here, right? Which you could have probably refined to a lower area if we actually had the ability of looking at all the different markets, right? So you could have secured that over there. But once again, you're free to sort of manage your trades to however you think it's best for you, right? So you can see you do have that 100 pip reaction from that block. Maybe you say that's everything and you want to close your trade over there, right? Just based on, once again, market structure, based on the fact that this took out this high, right? Retracement, further more bullish movements should be your expectation, based on the fact that the 4 hour, this is where you put everything together. 4 hour is the mitigation of this area, which has now mitigated this area, which has broken structure up over here. So you can see how everything is starting to make a little bit of sense as you try and put the story together. But it is important that you do not go and say, okay, I want to short over here just because, right? That's what I want to do. You have to make sure everything is lining up and making sense for you to have a higher probability of achieving a winning trade, right? So I think I'm gonna end this video over here. Probably gonna be summarizing some of the key ideas that we went through, and we're probably gonna be stopping the video at that point. So let this run, let it do what it needs to do. So you can see this is the higher time frame FU. This is a higher time frame block. This is the last thing that we're gonna be going through. Maybe this will provide you with a little bit of help. You can see where we're hitting now, right? And if you're not sure, this is the area where you could probably try and go short with confirmation, right? Um, let's go through this. This is based on the daily, right? This is the daily lower high currently. So you could expect a new lower high to form and we move further down. That could be an expectation for you, right? So let's say you wanted to go short. Why not, right? And essentially, lots of yippity yappa happen, moves up, moves down. I want to see where we try, where we actually hit. So if we remove this, you always want to ask yourself that question, right? So first of all, now I can see that we do have a bunch of highs. So this FU over here would have probably not been the best of the ideas and probably tapped over here. No, it failed to tap that. So I can't basically see it on this time frame, but it did eventually went and started moving to the downside, now mitigating this block. So it may now push further up, right? We don't really know what's going to happen over here. Um, Yeah, and that's sort of basically a little bit of the trade. And with all that being said, guys, once again, I hope you guys took away a little bit of information in terms of how I view the charts, how I use the multiple time frames, and how can that be a thing that's going to help you in your trading. And I did try my best to emphasize the different ideas regarding market structure, which I do believe it is a little bit of a subjective topic. So if you do see that differently, I don't think there's necessarily anything wrong. Just make sure you're doing it consistently in the same way, right? So with all that being said, guys, thank you very much for listening. I do hope you guys found some value over here. That is the main idea. Remember that the mentorship link is in the description below for daily analysis, weekly outlook videos, community, different channels, a Google Drive database. There's lots of things that you are able to go through as you join. So if you're interested in that, you will find a link in the description below. And with all that being said, guys, take care, everybody. If you made it through the entire thing, thank you very much. And I will see you guys very soon. Take care.